What's going on, everybody? Welcome back to another video. I'm here with the man Rick Stein. My name is Jonathan Moore, and we're gonna be having another mentorship minute where I come to you and I ask you some questions and see what's going on, and maybe questions that I have in particular.
Absolutely, anytime, sure.
So what's new with you? I heard you got some new things going on in the works now.
I do. One of the really nice things or wonderful things about real estate investment is that the umbrella of real estate investment is huge, and you couldn't possibly do everything, and you really want to know what you're doing in a particular niche, but there are other possibilities besides only real estate. One of the things that I'm negotiating now is a bundle of tax liens. I used to work for back in the day, when I still had brown hair, I used to work for a tax lien corporation in Bordentown. And I learned about the tax lien business, and I still have friends in the business. So about 2 weeks ago, maybe more, one of my friends I've known for 25 years, who still has contacts, calls me up. He says, "Rick, I have a bundle of about 15 tax liens on about 12 properties." Okay. And now understand, these are liens.
Right. So what does that mean?
Okay, yeah. Good question. Every municipality wants their money. And every municipality is going to have a certain number of people who just don't pay the taxes for whatever reason. So about maybe once depending on the municipality, every 6 months, every year, they're going to have a tax sale.
Okay.
So you, as an individual, could go to the tax sale, and you could pay the taxes, we'll say, for that 6 month period or the year, and you now own a lien on the property. And since it is a tax lien, it takes precedence, real estate tax lien, it takes precedence over every other lien, including a mortgage.
Really?
You are automatically in first position.
Wow.
Okay. Well, for good reason, right?
Yeah.
They want their money.
Right. The tax man's got to get paid.
So now, I'm not going to go into the interest rate because it's really an auction. Okay. But you will now own a tax lien.
Okay.
All right. And you could be getting anywhere from 0 interest up to 12-18% on your money. Now, no one's paying you until they redeem the lien. So in other words, now you own a lien, right?
Okay, so I own the lien now.
You own the lien. You don't own the property, you own the lien. Right. All right, it's like a mortgage. You own the lien on the property.
Right, which they can't sell the property until they settle the lien.
That's right. Okay. If they go and sell the property, you got to get paid first. Okay. So it's your principal amount plus interest.
Okay.
All right.
All right.
Now, once that happens, what you want to do is you want to continue to pay the taxes on it.
Okay, so now I paid the money for the lien, right? So now I have the lien, and then I want to continue.
You do, because you want to protect your interest, because you don't want someone else to pay the taxes and then have a lien after you.
Okay.
All right. So anyway, now this is a topical discussion about this. It's not detailed. If anybody wants more information, they can study it. This is just very topical.
Okay. All right.
So now you want a lien. The owner of the property, that's not you, you have the lien, but the owner of the property has a 2-year right of redemption. Okay. In other words, you can't foreclose, you have to wait 2 years. Okay. After 2 years, now presumably you've been paying the taxes for 2 years, right? Right. And
because I basically assumed those taxes.
Well, you want to protect yourself.
Right.
But here's why. You bought the lien in 2012.
Okay, yep.
And now in 2014, it was eligible for foreclosure, but you didn't. Okay? Okay. I go along in 2014 and you didn't pay the taxes for 2014, I do. Oh. And now I wait to 2016. My lien is eligible for foreclosure because it's 2 years old. I foreclose and I foreclose you out. Oh. And you've lost your money. But if you foreclose, you can't foreclose me out. Okay. You got to pay me. Okay. So I can foreclose on prior liens, but not subsequent liens. Okay. So that's why you want to keep paying your taxes.
Right, because then that protects my investment.
That's right. Exactly right. Okay. In any event, so now there is this bundle of about 15 liens on about 12 properties. Now, the question is, if I were to foreclose, they're all eligible for foreclosure because they're all at least 2 years old.
Okay, so you can all right. So if I could back up for just 1 second, so you can get a lien that could be brand new, or you can get one that's already at the 2-year mark.
Well, then some of these liens are much older than that.
Oh wow! Oh really? Okay.
Yes, okay.
Okay.
But he's just like you could sell notes.
Mm-hmm.
You can sell liens.
Okay.
Now, obviously, I would not be buying the lien at the face value of the lien, buying at a discount. Okay, just like notes.
Right.
All right. So anyway, I drove by all of these properties. Why? Because I want to make sure if I foreclose, do I want the property?
Right. Right. Yeah.
Or is it falling down?
Right.
Right. I don't. Is it in a bad area?
Somewhere you don't want to be.
Right.
It could be a complete piece of junk.
That's right.
Right.
But I drove by all of the properties,
Mm-hmm.
and I am. I wouldn't mind foreclosing on any of them.
Oh,
All right.
okay.
Now, he wants to sell the whole bundle, and he's willing to sell it at a discount.
Okay.
So we're negotiating an offer now, and we're very close.
Okay.
Back
So
when
so it's negotiable.
Oh yeah.
Oh wow. Okay.
Why would I pay face value for the lien?
Yeah. You wouldn't make any money.
Well, if the guy redeems them tomorrow, I've made no money.
Right.
I would only make money if I keep paying the subs, and it's money out of my pocket, and then he's paying 18% interest on that. But I wouldn't do that.
Okay.
Just like a note. If you go out and you buy a non-performing note,
Mm-hmm.
in a mortgage, you're buying it at a discount. Because there's more risk involved.
Right. It's not performing.
Right.
Right.
So you're not going to pay face value for it. It would be ridiculous.
Right.
All right. So I'm offering him approximately 35 cents on the dollar.
Okay.
So if it's a $20,000 lien, so what is that, about $6,000 something dollars? Okay.
Mm-hmm.
So now let's just say we agree, and I buy this entire parcel for about $80,000.
Okay.
All right.
Mm-hmm.
I then have a choice. I can just let it sit there. Keep paying the subs, collecting 18% interest until one day they decide to redeem it and make more money. Or I could have my attorney send out foreclosure notices on every one of them.
Mm-hmm.
Then the homeowner, who has his head in the sand, they're not bothering me, so I'll just let it ride.
Mm-hmm.
Gets a letter, says we're about to start foreclosure. Ooh, I better pay this off.
Mm-hmm.
Now I bought the lien for 35 cents on the dollar, but they got to pay me the full dollar.
Okay.
Right.
All right. Yeah.
Okay.
All right.
So I'd be making money there, right?
Right. Even if they do pay it off and they redeem it,
I'm still making money.
Right.
And then I don't have to pay any subs anymore, right? And if there are any subs, I don't have to pay them because I don't own the property. They just pay me my lien off.
Okay.
Okay. Now, let's say that we go through the foreclosure. Now, New Jersey is a judicial state. It has to go through the courts. It takes a while.
Okay.
It could take 6 months to a year. But let's say I foreclose. Well, now I bought a property that's worth, we'll say, $100,000. Did I pay $100,000 for the property? No. Did I pay 35 cents a dollar on the $100,000? No. I paid 35 cents on the dollar on the lien, which may have been a $20,000 lien.
Wow.
So I ostensibly I could get this $100,000 property for let's say with legal fees $10,000.
Right.
Is that a bad thing?
No, it's not a bad deal at all.
Okay.
Right.
And then maybe there's all kinds of possibilities.
Mm-hmm.
Are there risks involved? Of course there are risks involved.
Mm-hmm.
I haven't seen the properties.
Okay.
I haven't been inside the properties.
Okay.
Now, if someone is going to redeem, they might contact me. Let's work something out.
Mm-hmm.
Okay, I need to meet you. I need to see the property. So, point is that, and I don't know if it's going to happen, but we're very close, that I'm going to possibly buy about $300,000 worth of liens
Mm-hmm.
for about $85,000 something like that.
Okay.
In the 80s, some $1,000, and then am I going to use my own money? No. Now you know me better than that.
I do know you better than that.
Okay. So what I'm going to do is I'm going to borrow the money. The loan, will be collateralized by the tax lien certificates. Because I don't own the property.
Right.
They'll be collateralized by the tax lien certificates, which will be held in escrow.
Okay.
I'll have in the note, so-and-so, the homeowner of this property, redeems my lien. I can take that money and pay down the lien.
Okay.
Investor's getting that money back, and I'm reducing my loan, and obviously my payment.
Right.
Okay?
Right.
So it's just another real estate investment opportunity under the huge umbrella that we call real estate investments. So there are people who say, listen, I don't know about rehabbing properties and I don't have the time for this and so forth. You can buy liens, or you can become a private investor and invest passively in real estate. And I think that's one of the things you wanted to talk to me about in addition.
That is one of the things I want to talk to you about. So we'll save that for the next video.
All right.
But in the meantime, if they wanted to get a hold of you, they can reach out to you.
Okay. RLS Properties LLC. You can go on my YouTube channel, which is RLS Properties. You can subscribe to it. All of these things, educational things, my rehabs, my rentals and so forth, they're all on there. John does a great job for me. And if you have video needs, you call John. And my cell phone, if you want to call me, you want to ask me questions, 609-213-7250. Thank you.